Okay, in building these templates, I also summarized, and I'll put it up on the website, what the tax rates are for 2017 and what the new ones are for 2018. And you can see that there were graduated rates for 17, and the rates are also graduated for 18, but they're lower for the different brackets. And you're going to see the effect of that. I took a couple of examples. This first one is for a single woman who lives in Westchester County, so she's in New York. And in this case, she does not own a home. And the effect of this act is that instead of paying $30,000, as I had calculated based on her 2016 return, assuming the same income and deductions, she would be paying $26,000 or $4,000 less. So even the effect of having a smaller deduction and no personal exemption for 2018, she still, because of these lower brackets, come out paying less. All right, so that was kind of surprising to me. Also, here's another case. This one is for a New York City resident who will pay more in state and city taxes, but in a much different income category. This person has a salary from a deferred comp kind of plan, and interest in dividends, capital gains, pensions and annuities, Social Security, for adjusted gross income of $603,000. So some of that is ordinary income. That was the first thing I needed to do, was separate what was taxed at higher rates and what was taxed at lower rates, namely capital gains and dividend income. So these are the kinds of calculations it's difficult to do through a very general calculator on an internet or to do by yourself. I would really love to help you with doing this. And so I calculated, and this shows the calculation of that income. First on the ordinary income, because his deductions were major, $158,000 of deductions, and most of them were real estate taxes on his home in New York and also the one in Florida. And the tax on that was that, and he has a household employee, that taxes on the gains and the dividends, and an AMT, alternative minimum tax, of $39,000, comes to $136,000. So in the case in 2018, he's going to lose a lot of those deductions. And he will, lose his state and local income tax, his real estate taxes. He's only going to be able to keep $10,000 of the property taxes, mortgage interest of $2,500, and charities of $25,000. So his deductions went down from 158 to 37. But look at how the effect of these tax brackets worked out, where his taxes dropped. His income taxes dropped from 136 to 126. And a lot of that is because the AMT no longer applies to him, because his adjusted gross income is under $500,000, which is the new exemption amount for high earners. All right, so he will be paying higher New York and New York City taxes, New York State and City. I didn't calculate it here, but his federal taxes approximately, these are just approximations, would drop $10,000. I also looked at that, so those were for two single people. I also looked at how it would be for two different married couples based on actuals. So these are the married rates, and you could see that these rates, this actually should say 35% here, and 37%, and this couple is she is a W-2 employee making a salary of that much. They have some interest in dividends, and the And he has a separate business, sole proprietorship, and they had some capital gains, and the adjustments for self-employment tax and a SEP IRA they set up on that business with some substantial itemized deductions. This is what it would look like for 17 if the income and deductions were similar to 16. So the tax on that I calculated to be $58,000 through these different calculations. And now in 2018, there's an extra 20% because of this pass-through entity, the sole proprietorship that he has. 20% of this 52,000 can be deducted. It's an additional deduction, so that reduces it. And then the itemized deductions, they have high real estate taxes, gets lowered to what's allowed for a couple, 24,000. That brings the taxable income up from 222 to 230. But you could see the calculation, the effect of these different tax rates, and also the lack of the AMT makes their total federal tax drop from $58,000 to $49,000. This is a couple that was very, very concerned about the effect of the tax rate, and I'm pleased to find out, the Tax Act, pleased to find out that it looks like it will not have that big of an effect on them. Actually, it will have a beneficial effect. This is a different couple in a different income bracket, lower income bracket. They both earn salaries which total that. They have a small additional amount of business coming through a sole proprietorship. And there was some cancellation of debt, which was ordinary income. And the effect of this, and they had some substantial deductions relative to their income, and they have quite a few exemptions. There are 4 children that this couple have. So there's a concern there about that loss of that. That tax totaled, net of credits, 2 of the children are in college, 2 are under the age of 17. And so that resulted in a refund to them beyond their withholding of $2,378. Now in 2018, you can see most of this stays the same, but instead of 31,000 itemized deductions, they're only allowed 24,000, and they lose this big exemption amount here. However, the lower brackets have a beneficial effect in moderating that loss, and the total tax goes up from $2,000 to $5,008. However, the additional $2,000 of child credit, because the child tax credit has increased from $1,000 per child for the 2 children under 17 to $4,000. Yet it still causes their refund, instead of being $2,378 down to $694. So there's an increase of tax, about $1,600 for this couple. And this was the couple that the media would have probably indicated would benefit the most. They're in a $75,000 income bracket. So you can't really go by generalities, or maybe the press coverage is good and thorough, but it's very difficult to generalize. So I suggest you run the numbers. It'll give you some peace of mind. Or if it turns out that you have to pay more taxes, at least you could plan for it. So please come to my seminar. And the first one will be in Westchester County, January 3rd, 4th, and 5th of 2018. It's a good way to start off the year. And look for postings of additional seminars throughout the metro area. I'm Fran Sisco. Get in touch with me through Facebook or go to my website at transfrancisco.com. That's spelled trans, standing for transgender. Fran, F-R-A-N, Cisco, S-I-S-C-O.com. or send me an email at Francis, spelled like the Pope, Sisco, S-I-S-C-O, at AOL.com. All right. Thanks very much. Have a great holiday. Bye.